For decades, banking looked the same everywhere. Branches, paper forms, legacy systems. Today, most finance happens without us even noticing it. Payments, credit, and savings are no longer something we go to. They are something that quietly happens inside the apps and platforms we already use. And the biggest drivers of this shift are not banks, they are big tech like Apple, Google, Amazon. They are not trying to become banks in the traditional sense. They are doing something far more powerful. They are redefining what banking feels like, where it happens, and who controls the system underneath. For years, the story was simple: banks versus fintech startups. But that story is outdated. Today, the real competition is the platform economy versus everyone else. Big tech firms are slowly embedding financial services directly into their ecosystems, not through flashy announcements, but through quiet updates, partnerships, and infrastructure changes. At the same time, banks themselves are becoming more dependent on these companies. Cloud services, data analytics, AI-driven risk tools. Much of modern banking now runs on big tech infrastructure. It is becoming part of a much larger digital platform battle. Let's start with Apple. Apple doesn't present finance as a separate product. It blends it directly into the operating system, like Apple Pay, Apple Card, high-yield savings, and even Apple Pay Later. The key idea is control over the user experience. Finance becomes a feature, not a destination. Google takes a different path. Rather than focusing on consumer-facing banking products, Google builds the infrastructure banks rely on. Google Cloud now supports core systems, risk models, fraud detection, and AI tools at major banks. Google doesn't hold deposits, but it shapes how deposits are processed, analyzed, and protected. Now, Amazon's approach is rooted in commerce. It uses real-time seller data to provide working capital to merchants. Instead of traditional credit checks, loans are adjusted dynamically based on business performance. This merges operational data with financial underwriting, something traditional banks struggle to replicate. Now, across all three cases, the pattern is clear. Big tech is not creating tech banks. It is creating, though, financial services that feel like natural extensions of digital life. The most important shift isn't what consumers see, it's what happens behind the scenes. Cloud-native systems, embedded payments, and data-driven financial tools are becoming the backbone of modern banking, and big tech provides much of it. Banks now do rely on technology firms for things like risk modeling, fraud detection, cybersecurity, regulatory reporting. This gives big tech enormous strategic leverage. When banks outsource their infrastructure, they risk losing technological differentiation. But meanwhile, platform providers gain visibility into financial flows across the system. Now, big tech may not be a bank, but it increasingly owns the rails that banking runs on. Big tech also changes how financial decisions are made. Credit becomes data-driven and dynamic. Payments become invisible and frictionless. Savings become part of user engagement. Amazon adjusts repayments based on real-time business performance. Apple integrates credit into device usage. Google enables embedded payments inside everyday digital activity. Now, finance no longer starts with a bank deciding when to lend. It starts with a platform deciding when finance should appear. Money follows behavior, not the other way around. This transformation creates tension. Regulators were designed to oversee banks, not global technology platforms that are offering bank-like services without banking licenses. Authorities are already questioning gatekeeping power in mobile payments, data privacy and surveillance, competitive fairness inside digital marketplaces. Big tech operates just outside the traditional regulatory perimeter, but with massive financial influence. As embedded finance and AI-driven decision-making expand, pressure for new regulatory frameworks will grow. The rules of banking were written for institutions. The future of finance is being built by ecosystems. So what happens when big tech enters banking? Well, it's not a takeover, but it is a transformation. Apple shows how finance becomes invisible, Google shows how infrastructure becomes power, and Amazon shows how commerce and credit fuse through data. Banking shifts from institutions to platforms, from branches to software, from balance sheets to ecosystems. The real question is no longer whether big tech will reshape banking, because it already has. The question now is different. How will banks adapt to a world where finance is no longer the center, but the background?